We have to begin with what's happening with the euro right now, not just because of the French elections, but also the commentary that we're hearing out of Sintra from top ECB officials. When it comes to the outlook, you have called this a fraught girl summer. You say a national rally majority is a worst case scenario for European risk assets in your view. Can you expand on that and some of the key levels that you're watching on euro right now?
Yeah, absolutely, Dan. I think the reason it's so fraught is really this concern around this national rally majority. And yes, we're hearing some dropouts from those on the far left and some in the center trying to sort of unite against the far right. It's still looking quite close in terms of a possible majority for the national rally. Our base case is they don't get a majority. I think, though, even if they're sort of ruling from the minority, we're going to head into the fall here with continued concerns around the French deficit. The EU, of course, just formally censured France for an excessive deficit procedure. So it's going to be messy politically heading into the fall, even if National Rally don't have that majority. And so we're looking for euro to kind of trade down another big figure or two toward 105, 106 into the fall, given these concerns. Of course, we have the U.S. election to worry about, as you were discussing earlier. There's a lot of political sort of headwinds out there for the euro. So while we have some hawkish ECB commentary, I think those political risks could also come back into play in the fall.
What does the ECB do next then? You've just heard from Madame Lagarde there kind of laying out a timeline, laying out a framework for how rate moves are likely to unfold from here. What is the next move for the ECB given those concerns that you've outlined, and also given the fact that France is, of course, Europe's second largest economy, clearly also weighing on the euro outlook as well?
Yeah, I think the ECB will be very conscious of the exchange rate, but so far it's pretty well behaved. I think ultimately what happens in September is hinges really on realized inflation, right? That's been the key message from the ECB throughout this, is data dependency. We have the preliminary numbers for June from some of the member states for inflation. They've been pretty well behaved, but we're not back at 2%, looking at, say, 3-month, 6-month annualized numbers. So September is still very much a toss-up between no move and a cut. Our base case is 2 more cuts, one in September, one in December, but the risks are increasingly skewed toward just one at this point.